Welcome to G2 Weekly Market Update. Global markets made notable moves this week as US economic data softened, the Federal Reserve struck a more dovish tone, and optimism picked up across major regions. Let's take a quick tour around the world to understand what moved the markets. United States. US markets closed the holiday shortened week higher, supported by dovish Fed comments and weaker than expected economic data, both reinforcing expectations of a December rate cut. Small cap stocks led the rally, with the Russell 2000 jumping over 5%, while the Nasdaq rebounded after last week's AI-driven sell-off. Key highlights: retail sales slowed, rising just 0.2% in September, signaling cooling consumer spending. Producer prices stayed tame, with core PPI rising only 0.1%. Jobless claims hit a seventh-month low, showing pockets of labor market resilience. Consumer confidence slipped to 88.7, its lowest since April, on concerns around inflation, tariffs, and politics. The Fed's Beige Book pointed to flat economic activity, slightly softer employment, and moderate price pressures. Treasury yields dipped as markets grew more confident that the Fed will cut rates in December, supporting gains across municipal, investment grade, and high yield bonds. Europe. European markets moved broadly higher, with the Stoxx 600 up 2.35% and major indices like Germany's DAX and the UK's FTSE 100 also finishing strong. What is driving sentiment? Inflation across France, Spain, and Italy remains subdued, raising expectations that Eurozone inflation may start near the ECB's 2% target. The UK government unveiled GBP 26 billion in new tax increases to strengthen public finances, prompting the OBR to cut growth forecasts and warn of the tax burden rising to 38% of GDP by 2030-31. In Germany, business confidence dipped, but consumer sentiment improved slightly heading into December. Japan. Japan's markets posted solid gains, with the Nikkei 225 up 3.35%, helped by expectations of further US rate cuts and a rebound in Japanese tech and AI stocks. Key economic signals: Tokyo core inflation held steady at 2.8%, keeping pressure on Bank of Japan to consider tightening. Strong October data, industrial production, retail sales, and unemployment boosted confidence in domestic growth resilience. The 10-year JGB yield climbed to 1.82%, near 17-year highs, as expectations built for Bank of Japan rate hike. Japan's government approved a JPY 21.3 trillion stimulus package, raising fresh concerns about fiscal sustainability. The yen stabilized around 156.14 per USD, trading in a narrow range. China. Chinese markets climbed this week, with the CSI 300 up 1.64% and the Hang Seng gaining 2.53%, supported by strong momentum in domestic tech and AI sectors. However, economic data was mixed. Industrial profits fell 5.5% year-on-year in October, ending a streak of strong gains. Producer prices remained negative for the 37th straight month despite government efforts to fight excessive competition. Still, analysts broadly expect China to achieve its 5% growth target for 2025. G2 takeaway. This week's global narrative centers on softening economic data, improving rate cut expectations, and rebounding tech sentiment. While the US appears on a path toward easing monetary policy in December, Japan may be inching toward a rare rate hike. China's markets show strength despite weakening industrial data, and Europe remains stable with inflation nearing target levels. Overall, the global outlook is cautiously optimistic, but the policy inflation points approaching volatility may pick up. Thank you for joining this week's G2 Financetech Weekly Market Update. Stay tuned for next week's insights, and as always, we are here to help you navigate the markets with clarity and confidence. Thank you.